Hey guys, my name's Max. Welcome back to the channel. Thanks for being here. This is the Daily Covered Caller Outside Edition. I found my Keep ATX Weird hat. I love it. It's a beautiful day here in the ATX. Kind of overcast. I got Jackson with me. Jackson, you want to make an appearance? Jackson. All right. Well, Jackson's camera today. There he is right there. Jackson. All right. All right, guys. Well, I appreciate you guys being here this morning. Let's look at these. We'll start with Defiance, and then we're going to go to some of the other stuff we look at. Then at the end of the day, we'll do a quick volatility report and see where we think the market's going to go from here. We'll look at volatility, see what's up there. You guys watched my video yesterday with Cy from Tap Alpha. It's a new it's a new guy in a new fund, but they have a product called T-Spy, and they're going to come out with a product on the NASDAQ and a product on the Russell. Anyway, it was a good interview. I enjoyed talking to him. All right, so here's the SPX. We'll just start with it. It opened a little higher today, and now it's pulling back, but it's about 3/4 of the way through the profit box, so we'd expect about a 3/4 profit at this point in the day. Top line is max profit, bottom line is min profit. But look at that. Look at the NASDAQ just blowing up. Well, that's something to see there. So this is the first time the NASDAQ, well, we haven't seen yet, but here in 12 minutes, this will be the first time in a while the NASDAQ has closed a 30-minute time period outside of the upper Bollinger Band. The last time they did it was here, and it was a total fake out. The time before they did it was here, and it was a total fake out. So we'll see if this is a fake out or if this actually reverses the trend and starts a new trend. We can look at the volatility report and see what it's telling us. It happens to be up on the page, and it's double red, so it's as negative as it can be right now. But it's slow at turning points. So the market will probably turn, and then a few hours later it'll give a signal. So sometimes the reason I really like this strategy, and the reason I'm showing it to you guys, is sometimes it'll give you sell signals before the market turns. Right here, it gave a sell signal before the market turned. Right here, it did too. But in any event, all right. But the buy signals sometimes are late, so we'll see. Maybe the sell-off's over for now. I don't know. All right, so that's NASDAQ, but we'd expect a full profit on that one. Then we'll look at Russell. And we'd expect on Russell, I always say it's either the strongest or the weakest. Today it's the weakest, but on every day it's the most volatile. So it's only about a quarter profit right now. So let's look and see how we're doing money-wise on those. And then we'll look at some other stuff. All right, so these guys sold the 55.40 strike just like yesterday. They sold it 178 times. Right now, the SPX is trading at 55.26. So that's going to be in the money, and it's going to be in the money by what, 13 point something? What does it say? No, why is my math so bad? Well, because the number changed. All right. But anyway, 9.16. So that means they were going for 580,000. They're realizing about 420. I said about 3/4 profit, which was true. So now we'll look at triple QY. Boy, these guys have been losing assets under management. Concerns me a little bit. They just have 187, or actually went up to 191 this morning, and I did not catch it yet. I'm glad I saw this, but still, the general trend has been down. Okay, but these guys sold the 19,010 strike for 141 bucks. So they need the market to be about above 19,010 on the NASDAQ. Right now, the market's at 19,011. Ooh, 1 point to spare. So we can, we'll update this like that, like that. This should say 0. Yeah. Okay, so they're going for 1.5. They're making 1.5. They're down 43 cents a share on the month. The dividend estimate's $3.84 or 130 freaking percent. All right, well, I'm going to check that real quick because that's obviously too high. So intrinsic and extrinsic, there's a screw up in this formula. It looks like they sold the 19.010 strike yesterday night. Do you guys want to see how they figure intrinsic and extrinsic? So these guys on the NASDAQ, they sold the 19.010 strike at the end of the day. At the end of the day, we had to kind of guess where the market was trading, but the close was 18.918. So they sold the 19.0110. So they sold it a certain distance in the money, the distance between 19.010 and 18918. So that is 82. It's 82, right? No, it's 92. 92 points in the money. Okay. And the in the money is also represented by the green amount, by the green part on this, the green shading on this. So you can see it goes from 19.010 to wherever the close was, and that also equals. That's a way to kind of visually know what you're at. But that's how you figure intrinsic. So that's the intrinsic. It's the amount of money that option was in the money at the time they wrote it. So what's the extrinsic? The extrinsic's everything else. You just have to figure out what they got for the option, and they got 141 points or something. Yeah, 141 points. And it's 109 points in the money, something like that. So then you have to do the difference between 9 and 41. And what is that, 32? So this number over here, for some reason, the formula is not working today. I'll just input it manually. This one says needs to be 32 points is how much extrinsic you caught. And the difference is intrinsic. I already forgot what it was, but it has to equal 141. We know it's 32, so 32 less 141. That's right. That's what it was. 32 less 141 is 109. Right? Something like that. Actually, if I just figured this one, it'll figure this one for. I should figure the intrinsic first and let the extrinsic fall where it may. 32.23 instead of trying to do everything in my head. All right. I learned math before spreadsheets, and it's quicker to do stuff in your head than to get out a pencil and a piece of paper. Lots of times for me it is. I'm trying to think of a quick thought. I can just do it in my head faster. So anyway, sometimes that hurts me in the times of computers, and sometimes it helps me. All right. So the dividend estimate is not what I said it was. It's only 256. So, but that makes sense. That's more reasonable. Okay, now let's go back and see on JEPY's dividend estimate. Let's make sure nothing was jacked up about that. Gosh damn it. Yeah, this thing's jacked up too. I should have caught that before I came on the show. We'll do I'll tighten up that one next time. I'll make you watch that. Now let's look at IWMY. IWMY doesn't look like it has any obvious errors. So let's just see what these guys did today. They sold the 21.55 strike. Right now the market's trading at 21.49. So it's in the money by 6 points, 5 point something. Let's see what this says. 5.66. So that means they were going for $1 million. They're realizing 700,000. So these guys on their dividend estimate, they're $1. $1 in old shares, $3 in new shares, but 102%. Not bad. Not bad at all. Okay, now let's see what else we can get ourselves in the middle of. The freaking JEPY, I can't freaking believe I didn't catch this. It's just putting 0 on all the intrinsic and giving credit for all extrinsic. And that probably happened on one day, and then I just hit copy and paste or something and didn't catch it. But ideally, they should be just like they were last month. They should be different numbers. So I have to go back and figure them. Gosh darn it. Anyway, but this number right here is way too high. Way too high. I'm so sorry that I didn't catch this before I came on. I got up at 7:30 and worked on this for an hour this morning. I just don't understand why this spreadsheets, they're just every day it's something different. And never can be right. It's never been right. Never one day have I gone on the show and it's been right. It's always jacked up. No matter, and I'll try to set the alarm a half hour early and make sure it's right. That's what I did today. I mean, I need to get up another half hour early. I just tell you, it's always wrong. All right. But anyway, I just gave credit for about half just to do so we could have something for you guys to look at. I'm so sorry it's jacked up. That's not going to be right either, but it's closer than the last one. So we'll go with this for now. I'll put the actual numbers in later. I'll have to go back and reconstruct it. It ought to do it automatically, picking up this close right here. Gosh darn it. It just ought to do it automatically. Let's try to paste this formula. Maybe I got to work it again. All right. I got to work it again. That number's good. 79 cents. Well, let's make sure that number's good. All right, 79 cents. That's a number. All right, how's that sound? I know it's coming down, but it's probably coming down because yesterday the number was jacked up, and the day before the number was jacked up, and I hadn't caught it. I'm so sorry. I'll get up another half hour earlier tomorrow. I don't even like spreadsheets. I don't even enjoy doing this, but I've thought about just quitting the spreadsheet, but it is a huge value to know what the dividend is going to be before it comes out and to be able to track it all month. And I know a lot of people rely on that. And so that's the only reason I haven't quit the spreadsheets, because I do not enjoy doing them. I enjoy talking about them, but it's just the preparing them. All right. So let's see here. But I'm trying to make new spreadsheets that are more enjoyable to talk about with data shown in better ways. So this is my idea. All right. So right here, this is showing the daily change from the first of the month, from August 30th to whatever the first trading day of the month was. I think it was September 2nd or something. SPX was down 2.12%. From August 30th to the next trading day, they were down 1 point. This is how much they're down cumulatively. And now this morning, they're down 2.1% in 3 days. Okay, so here's some of the funds that trade SPX's volatility. So SVOL has been taking it on the chin. They don't do great when volatility goes up. We're going to look at volatility in the volatility report, but when it's going up, it's a clue for us to sell the market, and it's been bearish since Wednesday the 28th. And really, it's been bearish in the longer time frame since July 18th. So yes, volatility is doing something kind of crazy. In those environments, SVOL and ZIVB are not going to perform as well because they short volatility directly, and they're shorting something that's going up all the time. They're shorting this. They're shorting VIX futures, and here's what VIX futures look like. That's a 30-minute chart of VIX futures. But yesterday morning, VIX futures blew up, and it knocked a bunch of money. It made SVOL and ZIVB down quite a bit. Anyway, they'll recover. As volatility comes back down, they'll be the first ones to recover. But we just have to keep an eye on them. All right. And ZIVB is more highly leveraged. It's not really leveraged, but the way they do their strategy is more aggressive. So that's why they have more aggressive, more volatile results. Okay, now THTA is the opposite. They also trade volatility. They do it in a totally less aggressive way. So they usually have more muted results. Okay. So most of these funds are coming back a little bit. You can see the green lines today's change, or not today's change, but the cumulative change. iSpy's coming back. Look at XTTE. Of course, everybody loves XTTE. It's doing great. Started out kind of bad. It doesn't have a lot of protection on the downside. So you have a big down day like Tuesday, it's going to take it on the chin, worse than some of these other funds will. But it should also recover faster because of the way it's constructed. SPY is just a good one. SPY is just steady. We don't even need to worry about SPY that much. FEPI, I wouldn't say FEPI's as steady as SPY. It's more highly powered. Pays about twice the dividend, 2.5 times the dividend. All right, YMAX is taking on the chin today. They're down 3.2%, down further than yesterday, probably because of crypto exposure. JEPI, we don't even need to worry about that one. That one's super steady. Pays 8%, but it's super steady. Same thing with GPIX. Tons of upside. You don't get much yield, 7-8%. Great ETF, though. T-SPY. T-SPY is the new entrant to the field. Also, these numbers were pulled like the market hadn't been open 20 minutes when these numbers were pulled. So these numbers are changing all the time. iSpy doesn't update live for whatever reason. I have to go put the iSpy number in manually. I haven't put the iSpy number in an hour. So it's probably, we're hitting refresh. We'll go see what iSpy is trading at right now. And then we will, if anyone knows how to make Google Finance show you the iSpy price, I would love to know. I've tried every which way. iSpy is trading at 42.87. So we just go back here to Nubidex. iSpy is at, what did I say, 42.87. So it's actually gone up a little bit. 0.87. But then my chart doesn't update live, but it's fine. It doesn't make enough of a difference to pull it. By the end of the day, we'll have better results, or more statistically significant results. Now, this is a nice chart too. This is showing the 2-month cumulative change for these same investments. And it's basically the same thing we're seeing. We're seeing that ZIBB is having the most problem. XDTE is bouncing back. And who's having the least problem is THTA. THTA is out of these funds is having the least problem. JPY and iSpy look fine too. XDTE, which everyone loves, is actually down more than the other two right now. But it was because of the big pullback the other day. They don't have any protection at night, and the market pulls back at night. They're, it's like they've been with the lady of the evening without protection all night. They wake up the next morning. Sometimes they have a problem. They have to go to the doctor and get it taken care of, get some antibiotics. But like I say, it's not just a one-way street. If one of these funds invented a strategy that only made money and didn't lose money, of course, that's all I would talk about. But that you have Defiance, you have Roundhill, you have ProShares at iSpy, and you have Tap Alpha, all in the daily game. When you compare them, they have different versions of the strategy, but there's not one that's better in all circumstances. Like I say, if there was one, that's all we would talk about. All right, guys. Well, let's look at the volatility report and try to see what it's telling us. So for those of you that don't know, the volatility report down here at the bottom, and it gives risk on and risk off signals based on the price of options, which also known as volatility. It does it in 2 different time frames. It does it in a daily time frame, right? And that's these big green and red bars. The daily time frame back here, let's pull up the SPX. The daily time frame way back here went from risk off to risk on. That was May 3rd. That was a great time to do it. The S&P went from 508 up here to by the time it gave a signal the other direction, it was like at 558 or something. 50-point rally all summer long, just straight up. But then the great thing was, if you follow option prices, you understand how volatility works. Professionals right up here at this level started putting hedges on because they started to get bearish. I'm not a professional. but I've been doing this years and years. I made content about it. Hey, it's time to hedge. This looks like we're going to pull back into the fall and everything. So, everyone knew it and they put on hedges. Well, when they put on hedges, it switches this. This isn't, my system is a system. It's pluses and minuses. It has nothing to do with discretion. So in the daily time frame, switch from risk on to risk off here. But then I also follow a 30-minute time frame, and the 30-minute time frames are these hash marks. And I haven't gone back and put them in all the way back. I just went back to the 1st of August. But because this way we could see when we have a double signal right here on August or on the 31st, the 30-minute time frame was signaling risk off. Hey, everyone's putting on hedges. Something's going to happen. And also the daily time frame had been signaling it for 2 weeks. So sure enough, the market dropped like a rock. Well, the daily time frame hasn't gone back positive. The daily time frame is still saying, hey, this thing's going down. However, the 30-minute time frame, the shorter time frames actually gave a great buy signal on August 9th the SPY was 530. Then it gave a great sell signal at 561. Then it gave a false buy signal here. It gave a buy signal that didn't come true, but then it went back to sell, and sure enough, we've been selling. So right now we're on a double sell. That the system's bearish since 562. Now, like I say, it can switch fast. Let's see how close we are to switching. Okay, to switch the shorter time frame, you can see back here, you need the 30-minute bars to get under the 200-period moving average and close 2 bars underneath the Bollinger Band, indicating a trend down in volatility. And that means that professionals are taking hedges off. Well, that's what we're doing on the 8th and 9th of August. They took hedges off and wrote the SPY all the way up here to 550. Okay, so we got a ways to go. This index would have to drop to here. Now, the thing is, it'll probably do it, and by the time it does, the market will have already turned. So just like any technical indicator, this is based on backwards-looking stuff. It's based on moving averages and stuff that looks backwards. So, take it with a grain of salt, just like anything else. Lots of times it tells you what's happening after it's happened. However, like I say, there's occasions when it tells you before. This cell right here, that one right there, let's overlay, let's put SPX on there. That would have been a pretty good one. Not a great one, but so far a pretty good one. The S&P was trading. It was actually on the lows at 557 when it gave the signal. And it would have pissed you off because the next day it went up to, 10 points. You would have rather sold up here. But then within 2 or 3 days later, it was at, the S&P was down 7 points, which was yesterday. You could have sold your puts for a nice profit and rolled into some puts further down here, which is what I did. That's like stage one. And if we get past this gap right here where this yellow box is, right now it looks like it's acting as support. But I'm just saying, if we get past it, I think we'll aim for this area in the chart. So that'd be stage 2. So I bought puts with the profit from these puts that target this area. If it never goes to this area, that's fine. That's fine because I have enough profit in these puts where this is a free trade. And that's pretty much always what I try to do. I try to turn the first little, it's easy to predict the little pullback. And I'll always take the profits from that and turn it and put it all into a bigger pullback. And the bigger pullback usually doesn't happen. But when it does, you're handsomely rewarded. And the whole idea is you're handsomely rewarded at the time when your other portfolio, which is growth stocks, is hurting the worst. So I try to use my trading portfolio as a partial hedge. I try to act like my own hedge fund. And I'm especially aggressive with puts because when the market's pulling back, it's hurting my other portfolio. I'm not that aggressive on calls. If the market's going up, I'll just let it go up because the other portfolio is doing well. So that's how I use volatility and just the price of options generally to inform my opinion about the market. Well, anyway, right now we're just chopping. Who knows? Who knows? We're going straight sideways. I have a bad feeling that I just have a feeling maybe the sell's over and we aren't going to get the second leg down. I don't know why, but I'm just saying it. And if that's the case, we'll be ripping probably by the end of the day or by tomorrow, and we'll be at all-time highs by Friday. Now, I thought we were going to hit all-time highs last week also, and we almost did on this day right here. So on Friday, it went up and closed on the highs, but then that was a fake out. So we'll see. I know what you guys think. I'll keep this volatility report at the end of the report. The only people that are still listening are hardcore Max fans or somebody that's really interested in what the market's going to do. But anyway, I appreciate you guys being here. But if you guys have a different way to time the market, and like I say, I don't even really believe you can time the market. You can try to do it, but you have varying degrees of success. I don't think you should plan on doing it as a strategy for retirement. All right, guys, I appreciate you guys being here. Go watch my video with Cy from Tap Alpha if you haven't yet. And other than that, you have a great day. All right, take her easy.